Hello and welcome everyone to this last presentation before the lunch break. My name is Simon Granat, for those of you who doesn't know me. I work as an equity analyst at ABG, covering a couple of IT companies. And with us today, we have the pleasure of welcoming Strongpoint and the CEO, Tveraabak. And with that said, I'll leave the stage over to you.
Okay, thank you so much. And thank you for listening to Strongpoint. Strongpoint might not be known to too many of you, so I will provide you with a little bit of background about Strongpoint. Before doing that, myself also have been with Strongpoint now for a year, taken over after Jørgen Wåler, who was CEO for close to 13, 14 years. And I also have with me today our new acquisition, Hilde Horn-Gilen, who's the CFO, she's been with us since mid-February. So Strongpoint in short. Strongpoint is a retail technology company. And I put an emphasis on that because we also have two other legs, one called cash security and one called labels. But predominantly we're a retail technology company. That's where we get more than 75% of our business. We have about 1 billion turnover. Last year we had EBITDA of just south of 70 million Norwegian kroners. And I will also get back to what we have achieved this far in 2019 on the financials at the end. We're listed in Oslo, and we have our geographic presence in Norway, Sweden, the Baltics, all three Baltic countries, Spain, Germany, and Russia. Russia then for the cash security bit. We have 530 employees, and I believe with a quite unique position in the sense that we have both sales and service personnel with both hardware and software competence in most of these countries. R&D centers in Lithuania and Stockholm. So why did I say yes to join Strongpoint? And part of that reason is here. Just the strong fundamentals for a company like Strongpoint. And that one big mega trend is called e-commerce, which is for us is a double opportunity. E-commerce in retail leads to two things. On the one hand side, pressure on the brick and mortar retailers' margins. I don't think there's a day without us hearing about how the brick and mortars are struggling because of e-commerce. And it's true in the sense because you're basically taking top line from stores, putting it online. Whereas the stores still have the rental, the personnel costs, electricity, etc., etc. So what we're doing is we're providing solutions to help improve those squeezed margins. On the other hand side, we also have, in particular, incumbents that also realize that, hey, we need to start moving online. And moving online is not just taking a store online. I would argue a retail store online is something totally different. Retail online is more about logistics. It's about doing the picking and the delivery as efficient as possible. So it's more logistics operations. And I'd argue that you can say that some of the most successful grocery retailers have been in the market for 50, 60, 70 years. They're experts at making pyramids out of oranges. That's not what logistics business is all about. And we have the top-notch e-commerce solutions for picking and delivery. And I will get back to our product a bit more. But this is the double opportunity for Strongpoint. If you look at our product and solutions offering, as you see, mostly here focusing on retail technology. We also have, again, the cash security bit, which you will be familiar with in Sweden, where you have the IBNS technology that will destroy the content of the suitcase, money, if it's tried to be open in an unauthorized manner. And we also have a labels business, which produces labels for the fast-mover consumer goods. But predominantly, we are a retail technology company, and I will not go in detail on all the products, but rather let you know we have in-store products which you see pretty much every day when you go to the store here in Norway, in Sweden. You will see the Pricer electronic shelf labels. Yes, Pricer produces them. We install, service, and maintain those and monitor those both in Norway, Sweden, and the Baltics. When you go to a self-checkout area, we provide self-checkout solutions. If you happen to buy tobaccos, it's most likely you will be doing that on a VenSafe machine. And if you happen to actually be paying with cash, we're also providing cash management systems. So a lot of the things you physically see in stores, we do. And then there's also a tremendous amount of activities we're doing which you don't see, which is sort of software to the employees in the store. When you go to the e-commerce side, as I said, e-commerce is all about picking and delivery. We don't do any front end. There's way too much competition. We do logistics business with picking and delivery. And we were, I must say, fortunate enough to acquire Cub in the end of 2017. Cub is a Täby-based or Stockholm-based company that has the most amazing products, a gem, and I can just thank my predecessor for acquiring that company. They have a picking solution that's being used by most Swedish grocery retailers, and we're starting to export that outside Sweden. We, as Strongpoint, feel that we have an obligation to take this amazing product globally. So what we're doing is we're investing quite a lot of money into what we call E20 to provide a fully scalable SaaS solution. Right? So there's something noble about customizing a solution to the specific grocery retailer, but it's not very scalable. So that picking solution we have great expectations for, also forward. We have a number of software solutions related to deliveries, both route optimization and communication with both customers and employees. And we also have hardware lockers, so frozen, chilled, and ambient click and collect lockers that you also will see here in Stockholm and increasingly starting to see in Europe. I believe we have pilots in 6 or 7 countries right now in Europe. Very quickly about Strongpoint, here you see the primary markets in light shaded blue, and with the offices in different locations. As you can see, Norway, Sweden, and the Baltics is really our stronghold. We're increasing our presence now in Spain. We both have offices in Madrid with the main businesses, but also in Astoria, in Northwest, and Barcelona. And then we also have an office in Düsseldorf in Germany. We're working with both the larger retailers on our own and through partners, but also through owns Salesforce to more of how should I say, other segments than the grocery retail segment. The majority of the business is retail technology, and again, as you can still tell from the pie chart, Norway and Sweden are very important markets for us now, but increasingly so outside as well. Having been there for 1 year, we set out some key areas at the beginning of this year. And I'd just like to re-emphasize those for this group. Number 1 is really maintaining and growing our relevance with the retailers in our home market, so Norway, Sweden, and the Baltics. We have a fantastic both track record and relevance and reputation with retailers, and we want to continue having that by also adding on new products and solutions. And those solutions do not always need to be our own, right? So one example is Reflexis, a US-based workforce and task force management system that actually came to us, realizing that we have a fantastic strong position in the Nordics to be selling their software solution. And I think we're going to be seeing more of those types of partnership where we're leveraging our positioning in our home market to be selling others' products. But also vice versa, which I'll get back to. The other key focus area for us is to grow our relevance in Spain. Being in Sweden, it's kind of difficult to talk about cash, but actually in Spain, still 80% of transactions are cash. And whereas you go 5 or 10 years back in time when Strongpoint was selling its cash management solutions to retailers in Norway and Sweden, the business rationale for that was because you don't need to be paying the 50 or 100% overtime or UB-tillegg after closing hours to make up the till. Whereas the business case in Spain is much more to prevent internal theft or external theft. And we're selling that at a rapid speed now through a unique go-to-market concept we've called roadrunners, independent agents working on commissions for us. But we're also working with the larger retailers, and we've just started to scratch the surface. Last year, Alimerka purchased 720-something systems from us, cash management systems from us, after having tried it out for a rental period. And we expect to see much more of that going forward. I really want to replicate what we have in the Nordic markets, also in Spain. Also because the product market fit for our other products are great. I guess most of you also go to vacation sometimes to warmer countries, and it's when you go to the grocery stores, you would see that that's pretty much a different experience than being here in Norway. And I keep reminding myself that every time I see Walmart's future stores, it's pretty daunting to see they still have paper labels. And we're in a good position to be selling all those products we have here in Spain as well. And lastly is e-commerce. There's one big benefit of being in a country that have high labor costs, and that is that we have to be very efficient. And our e-commerce solution is super efficient. And that's where we're investing money to make that into a scalable solution to be selling that globally. And then you know that all these 3 points are all about retail technology. And that's true. That is where our focus is. But we will be the best both owner and employer for all the products, offerings, and business areas we have in Strongpoint. I'd like to shift then to what are some key actions, and then hopefully what are some results following that. I was asked the question, or being asked the question, what are you, or what have you done in the 1 year now that you've been around, Jacob? And I think the one word for Strongpoint is focus. We are only 1 billion kroner company. We cannot be all over the world. So one of the clear things we've done is sort of to convert what used to be own offices into partner offices. So we used to have an office in Malaysia, France, Belgium, and also in Russia on the retail side. And we just have to acknowledge that doing business in Malaysia is different than in Sweden and Norway. And we, if you take Malaysia as an example, we were fortunate or skilled enough to make a partnership with Radian Global Tech. Radian Global Tech have a much better footprint in Asia than we have. So rather than having our own base and hoping over time to build a similar footprint, we're leveraging their expertise and footprint already. I also spoke very quickly about the go-to-market efforts that need to be specific for the market you go to. Again, sitting in Norway and Sweden, it's pretty difficult to find a independent bakery or coffee shop or bar or restaurant. It's all espresso house and what have you. It's a very high level of chain consolidation in the Nordics. That's not the case in Spain, which means we can go to a bakery or a pharmacy, not with our own people, but through agents that work on commission. And you're basically standing across the counter talking to the decision maker on the other side. And you can make a sale of one machine, not the 500 or 700, which we're doing with our own key accounts, but the one sale. So we believe we found a very efficient way of selling to smaller retailers in Spain. We're also testing this now in Germany. And on top of that, we've sugared the cake with what we call easy access, which is a rental solution. So rather than paying a 5,000 or 6,000 euro upfront for a cash machine, You can make a 269 euro per month fee, which is much easier for the decision maker to swallow, and for us it's a lot higher long-term value. So again, when you read the Q1 and in particular Q2 and hopefully forward as well numbers, bear in mind that we don't get the full revenue impact on that 1 quarter from these rental solutions. We also spent some time strengthening our management team. I mentioned Hilde here with me today. Julius Stulpenas is the head of technology in the Baltics, or resided in the Baltics. Göran Tørn used to be the MD of Cube, so he's now with e-commerce. And then we've also, as I think every technology company should, have its own CHRO person. We need to have the best people in Strongpoint to provide the best solutions for our customers. And then lastly, also last fall, I announced a 30 million cost saving program that was in full effect as per January 1. So then with a little bit of figures, before I think we take questions. So comparing the first 2 quarters that we had this year with the last 2 quarters the same quarters in 2018, we've had a 15% and 19% revenue growth respectively. I say 19%, but bearing in mind that's our underlying revenue growth. In Q2 last year, Alimerka purchased the rental agreements that we had on the cash management, so it's purely a sort of financial uplift of 36 million kroner on the revenue. But underlying performance has been 15 and 19% revenue growth. This year versus last year's, we also started to report on the different business areas, so retail technology, cash security, and labels. And I'm very pleased that we're maintaining the strong growth, both in percentages, but of course also in kroners, in retail technology. We've done the same in cash security with some nice orders coming in from Sberbank in Russia in particular, but also European cash security companies. And label, almost like per definition, is a more stable business, going there with slow growth, and last quarter a little bit of a decline in its revenue. When you look at the bottom line, we have achieved a 17 million improvement on the Q1 and 25 million improvement versus Q2. These improvements stem from 4 things. Number 1 is the 30 million cost saving that's making its way into the quarters. Number 2 is that we're selling very strongly our retail solutions in both Norway and in the Baltics in particular. Number 3 is that we have managed to get the warranty costs that we had last year in cash security under control. So we were selling cash security cases in Russia, and it's a bit of a cliche, but the handling of the cash management cases were a bit more rough in Russia than in Norway and Sweden, and we had actually quite some warranty challenges. We spent the fall last year of managing those warranty costs, and those are now under control. So that was the third driver for this improvement, and the last is IFRS. So we moved it into IFRS 16, so that's a 5.7 million kroner impact on the quarters this year. Again, if you look at the different business areas, I'm very pleased again that the most improvement is coming from retail technology, and also pleased, of course, that in cash security, with the warranties being under control, we're seeing a very good uplift in bottom line. Again, labels is a bit more stable. It's fair to say Q2 was a challenging quarter for labels. A lot of capacity out there, and leading then to some margin pressure. And then I think I actually managed in 20 minutes.
I think that was perfect on on time. So initially, I'd like to stay with the figures. You initiated a cost-saving program on 30 million NOK. What did that relate to more specifically?
So there are three sources of that. Number one, I think it's fair to say that we had built a we didn't really have clear roles and responsibilities for what will technology and R&D do versus our sales team. We started building dual sales team. I think that was not only leading to confusion with the customers, but also to too much cost. Number two, we had both some external advisors or consultants combined with some staff functions that we actually decided to close. And number three is also related to actually converting some of the offices from own offices into partner offices. So the 30 million we said we would deliver, and we're seeing that we deliver on that from January 1. So pleased about that.
Excellent. And speaking of cost, how should we think about cost going forward? Do you need to make any extensive investments, either in technology or in personnel?
I'm glad you asked that, because we are super conservative at RSA, sometimes too conservative, in the sense that the only real capex we have is on the label side, where we from time to time have to upgrade our digital printers. But all investments we're doing in E20 or other kinds of product development, we're running as normal costs. So you will see on the balance sheet there's no potential skeletons in the balance sheet as such.
Okay, all clear. And today you have 3 legs. We spoke of them earlier here today. How are the synergies between the 3 legs? Would it be possible for you to make a divestiture of any of the legs?
Well, to answer the first question, when we talk about synergies, I think first of all, you should bear in mind that on the retail side, it's the grocery retailers, the non-food retailers, the foods and sort of pharmacies and bakeries that are the customers. On the cash security bit, it's the G4S, Nokas, Loomis, Brinks, Prosegur of the world, and whereas the labels is the fast-moving consumer goods. So it's pretty distinct types of customer groups. We do have a synergy on the label side, both because we have labels in some of the fresh deli counters in the stores, but more importantly on RFID tags and NFC tags that we could be printing in our labels division and using in our retail business. And we're running some pilots now, which is showing interesting progress. So we'll see where that goes. But that's about where the biggest operational synergies will be.
And how does the competitive landscape look like, both in terms of geographies and also in terms of the different segments?
Yeah, so if I may spend most of that time on the retail technology bit, because that question is actually quite complex already right there. We don't typically see a company competing head-to-head with Strongpoint on all dimensions. What we do see is that we see specialists on each product. So if you go to a self-checkout system, it could be ETAB or it could be NCR. But we also like to partner with some of our competitors, like in the Baltics. We are using our software on NCR hardware. So sometimes we meet them head-to-head, other times we cooperate with them. But again, if you go to e-commerce solutions, we don't really see a lot of other specialized picking solutions, at least not to the level of what we have. I think the biggest competitor is actually internal systems. So many of the grocery retailers are really large retailers, and if you just go back 5 or 10 years, there really wasn't really good out-of-the-box solutions. So they had to build something themselves. So yeah, we have a number of product specialists that we're competing with, and to some extent we're also competing with the internal either systems or functions or processes that the retailer have installed.
And speaking of that, and about the competitive landscape, etc., it comes to we get to the gross margin and what that currently looks like. You currently have a gross margin around 50%. Is that sustainable going forward? It's a fairly high level, and one can always say that perhaps a different segment is expected to grow faster than the others, or what's speaking for or either against the gross margin at these levels?
So when you're referring to gross margin, obviously you're referring to a lot of our hardware. I think we over time, as most other businesses, will be shifting more and more to software. I think we're in a unique position where we don't only provide software or only hardware, we provide both, right? And we will be seeing a shift from hardware to software, and for certain hardwares that we are a reseller of, it's not really the gross margin on those products that makes a business. It's rather the software bit of the business that is attractive. Not maybe for that one quarter, but for the longer journey where we're selling a solution where you pay per pick or pay per use rather than a one-off cost.
And as a final question, you currently have a robust balance sheet, and you're also experiencing strong cash flow. What's your ambition in terms of using this? Do you have any M&A potential? Do you seek to perhaps launch even further products? I asked that question earlier, but what's the ambition of using this capital?
We want to grow, and I think if you refer back to the sort of the focus areas that we have, I mean, there's no way we're going to be growing our presence in Spain purely organically. There's no way we can maintain our relevance with the retailers in the Nordic regions only by developing own products. We have to sort of partner and do acquisitions, and part of the reasons for getting a new CFO is also getting a CFO with extensive M&A experience. So yes, we will be doing M&A going forward.
Perfect. Looks bright. Thank you, Jacob, for the presentation and the introduction to Strongpoint, of course. With that said, we'll end the presentation today. Thank you.